Hey, good afternoon, everybody. Just turned 12 noon in Chicago, so it's morning for some of you and afternoon for others. So welcome, everybody. This is George Newberry, founder and CEO of AHP Mortgage Direct, and I'm joined by Larisse Sharinda, who is our president of both AHP Servicing and AHP Mortgage Direct. Welcome, Larisse.
Thank you.
And today we're going to talk about a project that actually we've been I shouldn't say a project, an initiative that we've been working on for the last couple of years, and we're now kind of rolling it out on a larger scale. And what we offer is the ability for funds, or really any mortgage holder who owns either land contracts, lease options, non-compliant mortgages, mortgages where there are literally compliance issues or are missing key documents, and how to create value by converting those into compliant, marketable mortgages. And so that's what we'll be discussing today. It's something we've done quite a number of already, both loans that AHP owns as well as loans for clients. So let's get started. So this webinar will help you if you own land contracts. Also, if you own non-compliant mortgages, document deficient mortgages. I'll concede that AHP actually owns some mortgages where we don't have a file. Somebody at some point lost the file. We bought it at a discount, and because there was no file, but the people keep paying, and that's great. But we have an assignment to us, maybe even a lost note affidavit, but not much more. And so if we go to sell that, it's tough to sell it at a strong price because of the lack of documentation. So those candidates, as well as lease-to-owns, anybody who has a lease-to-own, or if you own REOs and you're looking to do seller financing, especially in this market where the rates have gone up, it's become more attractive in some cases, to sell with seller financing. It certainly opens up the market to a wider audience. Mortgage underwriting guidelines have become more stringent over the last 60-90 days, and so if you're offering seller financing, you could typically open your property up to a wider audience and set yourself apart from other sellers who are just selling and you have to go and get your own financing. And because these can be written at decent rates, this can be attractive, especially, again, today's market, things have all risen a decent amount over the last 60-90 days. So that is what we're going to be talking about. So who is AHP Mortgage Direct? So we started AHP Mortgage Direct almost 2 years ago. I think we originated our first mortgage about just over a year and a half ago. We're now licensed in 49 states, plus District of Columbia, plus Puerto Rico. We're only missing New York, just like the servicer. We're heading towards being nationwide once we add New York for both the service and the originator. It just has not happened yet. We have we have mortgage loan officers that are licensed in multiple states. That's how we do this. We don't have offices in every state. We have really the office in Chicago, and we have a handful of mortgage loan officers who work remotely. But amongst them, they all hold multiple licenses. Larisse is the champion, though, of holding licenses. She actually holds 40 different state licenses, which is by far a record. But between the mortgage loan officers on our team, we do have coverage in all those 49 states, plus DC, plus Puerto Rico. And being that we can do this cost efficiently, we're doing these are remote originations. We're not having to have, again, branch offices, the overhead of that. It's all done remotely with the client from start to finish, and that keeps it cost efficient in order to execute this process as efficiently and cost effectively as possible. So how does this all work? Here's how we work with different funds. If they've come to us and they said, hey, here's a tape of different loans that we owe, and the people are paying. So these are paying loans, but for whatever reason, there's an issue. It's a land contract. It is a document deficient loan. It's a compliance loan. And usually they're finding this out. They may already know it, but lots of times these things rise to the top when they try to sell them in a performing loan trade or really a re-performing loan trade, and these loans get kicked out for assorted reasons. And hey, we agreed to sell 200 loans, and 18 of them got kicked out because of these different issues. And so those, I think, are the best candidates. I think all land contracts, all lease-to-owns, and in the mortgage realm, anything that gets kicked out of a reperforming trade, which usually means there's either a compliance issue or a documentation issue. So at no cost to you, we will call those borrowers for you. We'll mail them letters, just regular first-class letters. If you're selling REOs, we can put a link on your site where an interested buyer can actually start an application to finance an REO, and that could link back to our site, and we'll go through the application process with them. And we're already doing that right now, and we'd love to add you to the as one of the outlets for that. And then if you want, you can we can, for a $5 reimbursement, we can send priority mail. When we send a regular letter, it's just a regular letter. It goes out with a first-class mail stamp, and it may or may not get opened. If we spend $5 priority mail, the likelihood of it getting open is much greater. We use the full, like, probably 9x12 envelopes and put the letter in there. More likely to be open. Maybe I know with some funds we've done the calls, we've done the regular mail, and if people don't respond, then we upgrade to the priority mail. We do ask for reimbursement on that, just because sometimes it can, better the quality of what you're working with. And so if you give us a whole bunch that you think are a stretch, that's fine. We'll send letters, we'll call. If we start upgrading to the priority mail, we ask you to reimburse. I suppose if there was a high enough volume of closings, we could certainly revisit that. Application and underwriting. So once we get in contact with the consumer, we will take an application, we'll run credit. If they qualify for a conventional loan, we will refinance and you get paid off. That's probably the ultimate. If there's equity, you're getting paid off at 100 cents on the dollar. And that is a great outcome, since most of you have bought these loans at discounts. But many a times, the families do not qualify conventionally, especially as rates have guidelines have tightened over the last few months. So in that case, what do? We can originate, with your approval, we can originate that loan. We will fund the loan, and then we'll sell it back to you. And that will be a compliantly originated loan with a licensed mortgage loan officer in that state on a compliant set of loan documents. And that will vastly improve the marketability of any land over any land contract, any lease option, any mortgage that has compliance or documentation issues. And that's the process. It's fairly straightforward. We have, we're set up for this now, and especially in the market where we're in, where we are still getting, we get leads from Zillow, we buy leads from Zillow and do kind of conventional, traditional lead sourcing. But we found that this is oftentimes a captive audience, and something that we could do a great service for both the homeowners and for the funds. Everybody wins. I mean, let's talk about what the benefits are. Well, actually, let me talk. I'll go to the benefits first, and I'll jump back to this slide. So what are the benefits to the homeowner? There's going to need to be some kind of financial incentive, typically a lower interest rate or other financial benefit, in order to make it. We have to justify making the loan, so there needs to be one of those. And typically, you bought the loan, land contract at a discount, a loan with an issue at a discount. It makes sense to share some of that, provide a benefit to the consumer, typically in the form of a lower interest rate, and then they can, and it makes sense for them. Also, land contract or lease to own. Neither of those provide traditional ownership. If they convert those to a mortgage, they will now own the property in the traditional manner. Benefits to you: a compliant mortgage, much more marketable, typically at 5 to 10% greater, 5 to 25% greater execution. We've had files where, again, there's just a handful of documents, can never be securitized. None of the big RPL buyers will buy them at a reasonable price, and most of them won't buy them at all because they usually oftentimes they're securitizing them, and so it's just ineligible. We will originate a loan that you can securitize, and more likely, if you want to securitize on your own, or if you sell to groups that securitize, which will typically pay you, top price, the most competitive pricing. Let's go back to the other slide though and see a little bit of how we do this. So we do not write high cost mortgages. High cost mortgages create a lot of challenges, and but we can write higher price mortgages. So what's the difference? With a higher price mortgage, the APR cannot be higher than the average prime offer rate, which is 5.2% today plus 6.5%. If it goes over that, then that enters high cost mortgage territory, which is a problem. But if we can stay just under that, we can originate a higher price mortgage, and that is something that can be compliantly done. And the reality is, high cost mortgages, even if you did originate them, which we don't, they are the pool of buyers is rather narrow. Not everyone wants to own those even. So higher priced is definitely the way that we find to go. With that, average prime offer rate 5.2% plus 6.5%. So in that case, a rate of over 11%, which should be, in most cases, we're refinancing out of contracts that are in the 9 to 10% range. So we can stay, we can cut where they're at and stay below that high price or that high cost mortgage threshold. Now, in terms of who pays the cost for the refinance, if it's financed conventionally through a third party, and it all is providing a significant financial benefit to the consumer, it may make sense for them to pay the cost. But most of the times when these are refinanced and bought back by the fund pays. And but the financial benefit that you get through the increased value of the mortgage is oftentimes vastly exceeds the cost to complete the refinance. But if it was appropriate, and certainly if it's an REO sale where you're doing seller financing, we do see in those cases where maybe some costs are split, the seller pays some of the buyer's costs, or they can be passed through depending on the arrangement between the fund and the consumer, as well as what APR. We still can't exceed that average prime offer rate plus 6.5% when we add in the cost and the rate. Benefits, we already went over that. And so if you decided, hey, this is something that I want to do, it could be one loan, it could be 100 loans, could be hundreds of loans. And we've had groups come to us with all of those. Pennsylvania, as an example, Pennsylvania has been very, very difficult with a lot of land contract owners out there, and have been where the Attorney General's gotten involved, and I believe they were deeming some of the land contracts predatory, and that were originated, I believe, by Harbor Portfolio. And so holders of those land contracts were now looking, hey, how do I turn this into a mortgage to comply with what the AG's request? So some of those have come over to us. We're definitely open to doing that. Most of the cases, it doesn't need to have the AG involved. If you own one really in any state and you just think it's better for you and better for the consumer if it's converted to a mortgage, which it almost always is, then all we need is the data on the loan and the borrower contact information. We do a BK scrub, make sure we're not calling anyone in bankruptcy, and then we're soliciting, we're calling, and we are mailing in order to outreach to these homeowners and encourage them to explore a refinance. And if we can tell them that we believe we can reduce their interest rate and there's no cost to them, no out-of-pocket cost to them, oftentimes it's a compelling proposition, and we can typically do it. If we can get a conventional refinance and get you paid off, again, that's the ultimate resolution for disposition for all. But failing that, it's still a good deal if we can refinance, provide a financial benefit to the borrower, and provide you a loan that is significantly more valuable in most cases. So that's what we do, and we're looking to grow the number of funds that we do this for. And because we originate and we service, most of the clients that we do this for, both small and large, do end up servicing with us, and it makes it a very easy transition from origination to servicing. Laree, so those are some of the highlights that I hit, but what's going through your mind? What else do you think would be helpful to share with the audience?
I think in general you hit the main points. The team is already prepared because we've been doing this already for a year and a half. So the relationship that we have from the originations perspective of, contract for Ds or the non-QM mortgages to QM mortgages, from operationally, from underwrite to processing to fund, it's a well-oiled machine. Then from there to go back to servicing, that is also a well-oiled machine because it's all within the same umbrella. So, it's, to us, it's nothing new. We'd love to get, more business to help you out with getting your, your non-compliant, land contracts, mortgages into us, just to help make that a better value for you. And we're prepared to do it.
Appreciate that, Larice. Yeah, just to emphasize, they don't have to be serviced by us in order to convert to refinance. A lot of loans come to us where they're serviced elsewhere, and that's fine. We will reach out to those homeowners and try to convert them to a mortgage, and then it's your option. Once our function is to do the origination. Once that's done, you can refinance, you can service with us, or you can service it elsewhere. Obviously, we prefer if you service it with us, but it's no issue if you have other relationships that you need to satisfy. So I got to go over these just in the headlights, because just the highlights, because I did have I've noticed quite a few people joined at a later date. So I'm going to just go to the key points our proposal in summary is that if you own land contracts, if you own non-compliant mortgages, document deficient mortgages, lease-to-owns, or if you want to sell your REOs with seller financing, that AHP Mortgage Direct can originate those loans. We're currently licensed in 49 states, plus the District of Columbia, plus Puerto Rico, to originate loans. We have mortgage loan officers who are licensed in all the states that we're licensed in, and I still can't get over that Larice has 40 licenses. So that is what we do. This is all done remotely for the consumer. They'll typically, when they sign, they'll either go to the title company, or we will, most of the time, we're actually sending a mobile notary out to sign them up on the final loan documents. This is at no cost to you as the fund. We will call and mail the borrowers. We will, if you're selling REO that you want to have people apply for seller financing, we'll provide you a link so that you can have them directed here, and we will underwrite to your guidelines and go through the process and present you the see if people meet your guidelines, and ultimately if we can finance conventionally, if we can get you paid off totally or have them buy your REO under conventional terms, that's all ideal, and we will explore that first. But many a times, land contracts or some of these document deficient loans, we have people that are paying, but they do not have the credit and or the income to qualify conventionally, but we can still qualify them based on your underwriting guidelines. So if you approve, we'll refinance them. We'll actually finance it, and then we'll promptly sell it back to you to put back in your portfolio as now a compliantly originated mortgage. And the key here is we can originate higher price mortgages. We cannot originate high cost mortgages. So higher price is anything with an APR of 5.2%, or an average prime offer rate, which currently is 5.2%, plus 6.5%. So the APR cannot exceed 11.7. So actually, we're in territory today where most of the land contracts we see are in the 9 or 10% range. So we can easily provide a benefit to the consumer by refinancing out of those. We have to provide a benefit to the consumer. So if your rate is 9.9%, we try to, it needs to be something lower than that we go to the customer with. So there is a financial benefit to them. And obviously there's a financial benefit to you, and owning a compliant mortgage, and which can often be marketable at a significantly premium over a land contract or non-compliant mortgage. These can be securitized. Typically land contracts can't. Typically non-compliant mortgages and document deficient mortgages cannot. And all we need is a data tape with borrower contact information to start. We'll do a BK scrub, and then we'll start soliciting. So that's the presentation and the highlights. If you have any questions, now is a great time to ask. And you can type them in the question box, and we will answer each and every one of them. If you said, hey, this is for me, and if you have one loan, we will work that loan. If you have 100 loans or 1,000 loans, we will work all 100 or 1,000. You can reach out to David Norman, whose information is on the screen, and he will get you started. If you wanted to schedule in order to schedule a call, we can go over whatever questions you may have that are specific to your portfolio or your audience. I have a couple of questions that just came in. Let's see what we got. Do you inform the borrower that you're reaching out on our behalf? Yes, we typically will say that we are reaching out on behalf of your mortgage holder, and we are looking to, we're offering to refinance your mortgage, and we want to explore, we can reduce their rate, and typically we can, if you're willing to pay the cost of the refinance, then we can share that this will be at no cost to them, and that'll often be enough that they will provide us take an application, and then we can see what we can qualify them for. So the answer is yes. It definitely works better than just calling and saying, hey, people get a lot of calls where, hey, you know, interested in a refinance. So we say we're actually working with the existing mortgage holder. That is often very helpful. And we probably reference the service or your loan that's currently serviced at AHP, or service at Bay, or service at Saline, or wherever the loan currently is serviced at. And that's the only question so far. So hopefully, I mean, this is something, we have mortgages. I'm going to tell you, AHP owns a lot of mortgages ourselves, and we have done multiple reperforming loan sales over the last couple of years. You know, starting I think March of 2021 through today, we're just putting out about 200 or so reperforming loans to market, and about 10 or 11 million dollars in UPB. And so we've been selling that kind of volume every couple of every quarter, and that has we sold a lot, and but now that we're kind of in the most recent batch, we are proactively going back to see, hey, which were kicked out of prior trades, and we've already refinanced some that were kicked out of prior trades, and now they're back in the trade, and now they're likely to sell. And we patch together when we go to sale. We have the payment history from when they had the prior mortgage that they were paying on. It was just a mortgage that had some issues in the documentation, for instance, or it was a land contract. And now we have the new mortgage payment history, typically a lower payment. And so you patch all that together. It's a compelling story. Hey, this is a strong borrower. Maybe that you don't have to have so much of as long a history on the current loan, and still make a compelling proposition to sell that at a significant premium. From Chad, another question. You said you underwrite to our guidelines, but aren't there RMLO standards to adhere to? Absolutely. We still have to have an ability to pay. We still have to, and that's really a primary one. Larissa, any other? I mean, ability to pay is like the number one. We have to show that they can actually repay the loan. Beyond that, any issues that we got tripped up on?
It's you hit it. Net tangible benefit and ability to repay.
Yeah, so those are the key ones. Outside of that, credit and other types of guidelines, you know, debt to income ratio, we all have to be reasonable. But if they're reasonable, we can still kind of go to flexible limits based on what's acceptable to you. We can also do these stated. We don't have to always have everything documented. If the borrower's saying they make, you know, $3,000 a month as a plumber, and maybe they don't document it because they're getting paid cash, that's still something that we can often, if that's acceptable to you, then we can go with that if that's what they've stated to us, and that's what they sign their application on. And again, these aren't people, I'd be more, again, this is for you to make the decision. If you have somebody where you've owned the land contract, for instance, for 2 years, they pay every month on time, and they're saying they have stated income of $3,000 and they paid well on time, I think that's an easy yes. If you're doing, you know, if you have a different program for seller financing and someone's coming in the door saying, yeah, I want to buy this home, and my stated income is $3,000, you know, that's something where it could probably be acceptable, but you may want to, on our side, we'd probably be a little bit more, if it was our loan, we'd probably demand more documentation just to make sure that that loan is going to perform. And that may be it for questions. Any closing remarks, Larice? And I want to introduce, so Larice joined us recently. We actually had the mortgage loan origination operation in Brea, California, up until just the last couple of months. Robert Camarota was the reason that we had the operation out there. He's been a leader in the industry for a few decades. He retired last month, and as a result, we decided to move the origination operation to where both myself and Larice are in Chicago, and so Larice is now president of both the servicer and the originator. So a new face. Many of the same people, though. Some of the people in California are now working remotely, and some of the people, they already had some of the origination team members in Chicago, so they are now working here in the office as well. And I think that's it. So we hope to hear from you. We do want to, we'd love to work with you if you have a loan, 10 loans, 100 loans, however many you want us to try. We're more than happy to get started and start working with you on this. So please reach out to David. He'll get an appointment set up. If you need more to, Larice and I will both be joining calls as needed to help answer any questions that you have. So thanks everybody for attending, and we look forward to working with you. Have a great day. Thanks again. Bye.